Hi traders, welcome to Elite Currency. Chris speaking here with a update on the euro dollar and pound dollar, an extra video because of the dramatic price action unfolding on both of these currency pairs. So let's take a look. All right, this is the 4-hour chart euro dollar, and as you probably know, we were looking at the continuation of the downtrend around these fibs, 23, 38, 50 fib, because this is probably a wave 4. We had a very strong push to the downside, which probably is a wave 3 here, and we were expecting a wave 4. Now, price made a 3-wave pattern back to the upside like this, ABC correction, hit the 38.2 fib, that's what we were expecting, and we were looking for a downtrend continuation or a potential ABCDE triangle and then downside. Now, price started to move sideways and choppy, which is one of the reasons why in this particular part around here, we started to be careful and say, look, this is not the bearish bounce that we expected. If price breaks through this bottom, right, that would change things, but otherwise, it is looking a little bit like a bull flag, and it could break and move up to the 50 fib. We could have a break, pullback, continue. Now, we did have the break, but we didn't get to the 50 fib, nor did we have a pullback continuation scenario. So someone on Twitter asked me, are you still bullish because of the bull flag pattern, right? And I said, no, not with this particular bearish price action. Of course, when we are looking at the charts, it's flexible, right? And we always have to take into account new information. And when we have a wave analysis saying wave 4, it is always a little bit of a tricky situation because wave 4s are corrective, choppy, they can expand, so that's always difficult. But we have to keep in mind that the trend is down. Therefore, I already indicated that overall, it's a difficult spot. It might break to the upside. You might see a move up to the 50 fib, but the trend is down, right? Trying to emphasize that it's dangerous because of the trend. That's what happened. We had a higher high, but basically still a double top at the 38.2 fib and downside from there. And the break went up for 70 pips, but reverted back down. Now, the great thing with our, just a quick view of our SWOT candles, which I really like for understanding momentum, and you could see red candle, very strong red candle, indicating that bearish momentum, engulfing twins, and price has fallen from that moment already another 130 pips. So, those SWOT candles that we have are very useful in that regard, and I'm a big fan of understanding momentum. You can see how the wave 3 is captured as well. But anyhow, I don't want to, let's use the other template here to get a better understanding. We're now at the S2. So price might make a little bit of retracement. We had a very strong fall. It's just one swift, quick downside from here, from the R1 to the S2. No particular wave patterns in this. There's no wave 1, 2, 3. Difficult, therefore, to read whether this is going to continue right away or if it's going to pull back to some moving averages. And the S1, for instance, at around 116.75, I think it is, yes, 16.65. But ultimately, I think the target of this downside is 114.50, so there's not a lot of space left. So, there could be some breakout potential trades maybe on a lower time frame. You can see that it is already trying to break right now, actually below the S2 after a small bear flag on a 50-minute chart. All right. You can see when we zoom in maybe a little bit better. And on the hourly chart, we cannot even say it's a bear flag. It's just a very small consolidation. Let's take a look at the daily chart. Looking at, the daily candle, that's a pretty strong daily candle. So I think that, there would not be much retracement, if any retracement. Really unsure about that because it could also hit the minus 270 target and then retrace, for instance. There we go. But if it does retrace, 23.6, 38.2 fib are likely bouncing spots for downside. If it doesn't, then maybe some intraday trades down to 114.50, but there's not a lot of space left. So I would not be that interested in trading that. But for the moment, it does look like we're completing a wave 4 and down for 5. I think the best at this moment is to wait for retracement to these fibs, but we might not get it either. A lot of momentum on the 4-hour chart, daily chart, and hourly chart, so we might not get that retracement in this particular day. Maybe maybe next week, excuse me, but we'll have to see how far. If price has already broken below this bottom, then I think the wave target has already been hit, specifically if it reaches 114.50. So that could be still a strong bouncing level to the upside. All right, so be careful of that. And there could be reversal there. So pound dollar, same thing. Broke the flag to the upside, but didn't post a higher high. But went back down, followed the euro dollar, reverted back below the weekly pivot point, went back into the channel, and made a false breakout. And here too, basically our ECS candle indicating right here, this candle. The red arrow already indicates that, but if we put the ECS candles, you would see that this is bright red, indicating momentum to the downside. In the pound dollar, if you took an entry right there, the pound dollar is already up 100 pips as well. And as I indicated yesterday, if it breaks below 133, there could be a bearish continuation, which is indeed happening with this pound dollar. So here too, it looks like a wave 4 has been completed. It looks like the first correction was here. This was a second correction. This was a third, short but third correction. And overall price respecting the 23.6 fib. It looks like a wave 4 to me. And down we go for wave 5. The wave 5 on the pound dollar, I think, does have more space. If we break below the previous bottom at 132, I think the next round level of 130 is basically the target. So a lot of space there, a lot of pips to fall on the pound dollar if we get that break. But me personally, looking for a break below 132 and a bear flag and then a continuation lower. All right, so that's the next step. If you didn't take the engulfing twins up in here, then it doesn't make sense to trade it right now. Better to wait for break like this, wait for a pullback like a flag, and a continuation. Probably next week is a more logical moment for that. So I just wanted to give you a heads up and update about the euro dollar, pound dollar, that basically, yes, we were expecting maybe an expanded correction. That's what happened, but it was very quick and reverted back down. And when you see of course, price action like that, you got to be flexible and adjust the trading plan accordingly, because momentum candles like this are very strong, very quick, and provide a lot of info about the end of the wave 4 and the start of the wave 5. So know when a bull flag breaks like this, but it gets a quick snap back like that, we don't remain bullish because of the false breakout. It was a breakout, but a false breakout. So obviously, of course, in that case, we revert back to the wave 4-5 scenario and expecting continuation of the downside. Let's see how the weekly candles end up, but if it's something like this, more downside next week on the pound dollar specifically. Probably the euro dollar is likely, but we'll have a new video tomorrow or on Sunday with a new update. In any case, more free analysis you can find at elitecurrency.com, also our ECS start package or our ECS live service. In any case, wish you all good trading and see you soon. Cheers.